down to 1650. Let's take that higher to 4 hours. Okay, so on rejection here, we set 1.1650. We go for that, okay, because this is saying the protracted series, so we'll get higher out of that triangle. Okay, and these are the levels that will be shown here on our trade management chart. Okay. As advised, we would adhere to the lower end of the entries, 1.1670 and 1.7. Top is 115.90, right about 60 or 70 points below the 1.1650 that we expect to see. Alright, our target again is 1.1830. Okay, and that will give us a 1 to 1.5 risk reward trade. Alright, on pivot levels, we are the optimum entries would be around 1.17 and 1.1683 and 1.17, and this is the fluctuation high for the week. Remember, the issue is bullish. Okay, so what we just consolidating, so 117 is fine. It will soften and slow down at these levels and not go beyond. This is very important for us. 116.56. That level here is the band high, noise band high for the week. This is where the lower apex of the triangle terminates, and we would not expect price to fall way below that just to spike. You see all the levels are very close to one another. So like 116.56 is close to 116.47, is close to 116.38, and we are safe if we place our stop right below 50% between the low band noise and the fluctuation low at 115.9. Okay, and then accumulate these. Alright, and our target is 1.1850, 1.1830. Okay, and we of course confirm that we are moving into corrections, wedges, or that was a wedge down. We could see a wedge rising higher. We did not investigate that. We do not have a wedge here. We have strong positive momentum that we should note also on the hourly. This is higher than preceding momentum indeed, and we could have a breakout naturally. But we would know because we break above the high, okay, and we would have consistent positive momentum. That we would have more positivity and more strength. So we will not jump to conclusions. We adhere to the pattern shown, and we would be buying into that line. So we're buying into that triangle as of 1.1715 all the way down to 1.1615. Okay, our stop is 115.90 right below point C here. Okay. Our target is 150 or 150. Alright, okay. Of course, investment-wise, you may, if you're buying at 117.15 and that's it here, 117 and 116.50, you may wish to hold all the way up to 122. This is the target once you the resistance area below this candle. Okay, so you may hold on to your positions to that resistance level on the fundamental premise, of course, that the euro will be appreciating with the current rally in equities. Alright, our next issue is the euro yen. Alright, our next issue is the euro yen. Okay, if you have any questions, please move them on to the moderator. Alright, if you have any questions regarding the election, move them on to the moderator, and we will attend to these as we proceed in our analysis. Okay, so with euro yen, we expect to have a breakout, but it's still very sluggish. Okay, so let's take a look at the analysis. We are familiar with this trade, with this chart yesterday. We are buying into the bottom of C, code C, that should support. This has been dealt with several times, whereas momentum has reversed. Instead of being resisting momentum that drove prices below the cycle translation support, it has reversed to supporting momentum and the cycle translation support. So we are confident that we will jump out of 0.4C here, okay, and that is the end of the correction on strong fundamentals, which are currently unfolding in a Biden win and an equity rally coming, an injection of stimulus and oil in the US stock and equity market, which will of course affect all global markets. Okay, so we would want to buy into that bottoming formation all the way up to 125.90 or 125.80 and beyond. This is the current trade action today. Why 125.80 and 90? This is 125.90 here. Alright, we're buying into formation to test that neckline before we get higher. If the coming equity rally is going to be strong, we're going to go with this issue all the way to 152. Alright, so let's see the trade management chart first. This is what we're seeing. We have completed the wave 5 and are correcting it. And we should buy these fibs. Our first initial buy. Alright, break back into the uptrending channel. Okay, before we fall back to form shoulders. It is possible, of course, if the fundamentals warrant this, if there is going to be if there's going to be an election soon, then we would break higher, right, on promise of coming stimulus by the new administration. Okay, so let's look at this in real time, and it's still the same levels that we'd like to fill. This is wave 3 here, and this is wave 5, and we're filling the fill. And you see, of course, we assume that this is a well-defined inverted head and shoulder pattern, and we're buying into the right shoulders. Okay, so we're buying 122.50, 122.40, 120.50. Check these on our we're buying between 122.40 and 122.50. Our stop of below the market bottom, 121.40. That is 121.50 here. Okay. Our first target is of course 125, and the vice you could hold that 125 easy. I'll be beyond that on pivots. We don't have yet that one pivot, so 125 is actually the breakout high for the current market environment. Okay, so we could get some resistances there before we move any higher. Okay, so this shows us that our entries are in the higher end of the pivot spectrum. We are always buying with those 10 noise highs and fluctuation highs. Okay, 122.67, 122.56, and our stops barely fall below the noise band low, which points to how bullish this is going to be. This is true spectrum. Into it, if there is really going to be an equity rally once the results are confirmed. Okay, our next issue is the sterling dollar. Alright, so this moved higher, jerked higher once the BOE announced that they were issuing stimulus of 150 billion sterling per month, about 890 billion annual. Alright, and there were rumors that there was a possibility that they were going to introduce negative rates. The statement issued today by the Bank of England was that there was no consensus on that matter, and meaning that the majority on the board did not see that as an appropriate policy, and so it will not be implemented. Okay, so this drove sterling higher, and this is what we currently see. This is a very important development. We expect, why would that be a very important development? Because of technical issue of the 4-hour chart, and if this is where we are currently in the market. So that correction, we had the 3, that was a 1, 2, 3, 4, and that was a 4A. Okay, and 4A terminated in this ending diagonal, and that was 4C. Okay, so I've lost this pattern, very complicated, makes sense. And if that is a 4C, and we're bouncing at the bottom of the trend line of the ascending channel, and if this is an Elliott structure, and if we are going to get positive momentum, it is not shown here on the 4-hour chart, but we're getting that on the 1-hour chart, then we have broken out in 85. This is why, of course, we have the right fundamental to support us, which is a rise in equity markets, or a rally in equity markets, and we have the fire that has been issued today by the Bank of England to support equity purchases of 150 billion sterling pounds per month. Okay, so this is a very, if correct of course, it will be wrong, this is a very important entry to make, alright, because this is the market reversal, this is the current market reversal. We had a wedge down from completion in 4C, that is with 5 here, that is a 1, 2, that run up into 3, 5. Alright, that's 1, 2, 3, 4, and 5. That's 1, 2, 3, 4. 5, and that's 3, 4, and that's a 5, and we have an A, a B, and a C. We expect this is the first bullish wave 1 to buy into. C, of course, could be prolonged. Either way, it doesn't matter because we stopped at the top of 1. So we want 129.90 and 129.60. We are concentrated, we want to be in the market of course, so we just concentrate our entries at 129.20 and 130.20. Sorry, 129.90 and 130.20. We're only buying 2 minutes, okay, on the presumption that there is still risk and that we would add at higher levels, so are consolidating our once received perfectly alright. Okay. Okay, so we will not want to risk much, we're only risking 2%. Okay, and our stop is at 129, right below the bottom of 2 here. Our preliminary target is 132.60, but we would take that all the way to 136. We have here a breakout high for the current market November of 134.8. Okay, why would we want to take 136? Is really evidently shown here. That's 136. Okay, so we're going to probably 136. We also reminded that we are breaking above. We've dealt with this week cloud several times. We are breaking above the neckline here, and the last time we had that similar signal above that neckline. We went, the market drove 1,300. So here at 130 or down to 130.80, we're looking for 136 is about 4,500. Okay, we would want to get into that profit. We are also reminded that we have a cycle translation support. We have a cycle translation support in which we are buying. Okay. Alright, so someone may ask if we are so confident that this is going to go to 136 but only by 2 million. We want to be well invested. Okay, well, trade management dictates risk control, and this control here means that we have to be confirmed on a higher time frame before we go full size into the trade. Okay, so if we're going to buy 2 standard lots, a local correction, like the engineer is still choppy. This is the 1 hour, and we could still have a correction. So let's check that now on the 4 hour, because I haven't checked it today actually. We would want to have consistent momentum on 2 cycles. Okay, so these are the 1 hour and the 4 hours, and not as supportive as we'd like. How would we know that it is not as supportive as we would like? Is we have to test the first correction that happens here and run it again for 15 minutes, 1 hour, to see how deep that retracts. Okay, so this is good consistent momentum on 15 minutes. Alright, so we will want that to run lower once it falls below over both. Alright, if it doesn't go into negativity, but we have a move 2, dropping 2, and it goes higher, then we are confirmed that this is supportive of what we are seeing on the 4 hours, and what we're seeing here on the 4 hours, that these will remain positive histogram spikes on the 4 hour and probably on the 1 hour, and then we can buy in size. We can put it, of course, our risk. Okay, we know at that point the exact market low. Suppose it was there, for instance. Alright, and suppose we're buying here, we know exactly how many points or pips we are risking, and we can calculate that in reverse relative to our equity and how to the risk percentage that we would bear or are comfortable with on our full side. So we will know when we get confirmed, and we will deal with it together, and I will show that I am loading full size at that time. Okay, when we do get these momentum confirmations are very important, so that you are very comfortable with the position and that you load full size, and of course a very lucrative position if it were to go really all the way up to 156. Okay, so we move on to the next week. We'll take a few questions first. This question regarding Bitcoin. Is it going up or down? I'm sorry, we don't do Bitcoin, we don't do cryptocurrencies as yet. Okay, so we move on to reminded of that yesterday, that we're bouncing out. We checked that yesterday. Pretty much the same scenario as with the sterling dollar. We're bouncing on top of wave one. Okay, wave one here. Okay, and of course we should be going now to wave five. That was wave five in a wave three. To wave 4-5 and wave 5 all the way up to 144. So what's new with this? What's new with this? Is the importance of this entry here. It's pretty much the same like the sterling dollar. It's pretty much the same like the sterling dollar. Okay, we're jumping at, we're bouncing at the top of one. And if this is a valid call, it's a valid count, level 1, 2, 3, 4, 5, then the count correction has completed. Note that we have here the same ending diagonal that we have on the dollar. That, and this is wedge, triangular wedge, and on the sterling dollar we have its exact inverse and the exact pattern. Okay, so we would want to fill these, okay, and keep our stock of course, right, on the premise that we will continue support at that point. Okay, so we would be interested to fill 135.8 and between 135.8 and 135.5. Our stop is of course right below level 2 here, wave 2 here, okay. On the presumption that this is a confirmed Elliott structure and we're now on 4 in an inverted head and shoulder formation. So we would enter one of these discrete matrix, 135.8, 135.6, that's 135.5 and 135.8. Our stop is 134.5, right below 0.2, way below 0.2. Our targets for day traders is equivalent to the last high made at 137.5, which is wave 5. Okay, remember momentum is very new. Still making the rounding bottom in the market, so we will not go to 142 as yet. We're still doing the wave 1, and this is evident from that. Chart here, okay. You would take profit at 137.5. The first leg of and would terminate at the old high made or slightly above 138, 138.25, pull back to support on the whole resistance broken. Okay, so our logical and our correct target will be 135.50. And then when we do confirm that we're breaking out now in a 3 higher all the way to 142 and 144, we would re-enter, alright, at these levels on the momentum cycle of the 15-minute and smaller time frame chart. We would have ample time to do that and strong confirmation to go with that. Okay? We are, of course, just a minute. We're reminded that on our technical picture, we were waiting to break out or break out of this wedge terminal diagonal, and this is happening now. This is of course a smaller time frame, okay, but we appear to be breaking out of it, or we appear to have broken out of it. So we would buy a retest of that wedge. These are the values, 135.80, 135.60. Okay, and our stop is 135.40. Our target is 137. Okay, let's take that, check it. We could just about get filled now. Alright, these levels. Okay. If our stop gets hit at 134.50, of course we would not want to go into the trade and we would stand down. Like, we will not load it in full size because you could still see something like this happen. Of course, on the right fundamentals, on negative fundamentals, supporting it. You can still see an elongated wedge. Remember that we kept detailing and elaborating that price channels and patterns have a way to elongate size higher degree frame. We could still see this contract down. Momentum is very minor, so we are taking the risk naturally, and we would keep our size small. This is why it is small here. 2 minutes, alright, to wrap it up, we would enter at 137, 135.70. This is that level here, about that level here. Okay, and about that level here. Okay, and between 135.80 and 135.60. Our stop is 134.50, right below the bottom of 2. Our target, initial target is 137.50. Okay, at 137.50. This is that level here. We would expect rejection. That would still be high. 137.50 is fine. We would take target, and then we would have more lucrative positive momentum on the 4 hours and the 1 hour. Then we would reload all the way up to 142. Okay, alright. Our last issue in the analysis is oil. Everyone is bearish that now. Okay, and because of the current, actually spikes and corona numbers are down now in Europe, have improved, but the mortality rate has risen. Okay, so everyone is bearish oil because of course most of the economies have already again gone into lockdown. This lockdown is expected to last for a month. So if the numbers are falling, then probably it will not be prolonged, or they hope it will not be prolonged past that month. If, however, there is still continuation of a spike in numbers, then of course there will be economic lockdown. God forbid, maybe also winter. Okay, so here we have an ending diagonal, and we are supported. This is how the chart on the moving average. Okay, we are bearish this issue fundamentally. Alright, and we expect that the top of B is resisting at that neckline here. Okay, so that neckline here doesn't really show on that chart. There's a problem on here. Okay, we've broken below the old wave 1 motor bullish wave. Alright, and should have rejected. Oh, are now about probably to do a head and shoulder rejection. Alright, just about the cycle low. This is of course the cycle low of that cycle, 1 to 5. Alright, so we could add to our shorts all the way up again to 40. Our stop is at 40. We'll have to raise that, I guess. We'll need to take that to 40.50 or 41 or 40.70. We are initially, and we still consider to short. We are initially short at 38.50, 38.25, and 38.75. We took profits on these, really, but we did not take them. We did not close them. This gives you a reason why it is always good advice in trading CFDs to take short-term profits, long run or for long-term profits. So we were short 38.50, 38.25, and 38.75. Our stop is 40, right about here. Okay, right about the bottom of wave 2. Our target is 34. We expect this wedge to complete at 33.72 or 34. Alright, we could even see 33. Okay, alright. So, if you're not yet short, you may consider, everyone of course does its own due diligence, that you may go, we're now 38.95, you may want to go short at 39.50 or 39.70. Gives you of course better entries. All the way your stop will then be 41.50 if you are 39.50 or 39.70. $2 stop or $1.75. We're doing of course the same target of 34 or 34 by the bottom. Fundamental of course speaking, once if God forbid there is a spike in corner number, this will be volatile and go down quickly. There is of course very strong fundamental support. Somehow it is not being implemented at the moment. Most probably they anticipate to see lower levels to buy, to aggressively buy. So we would consider to take our profits at 35 and 30. So to recap on oil, we are short. We could consider today to sell at 39.70, that level shown here. We believe the market is already did correction. That was the next. So that was an A. We could now take that down here. And bring that up here and delete the X. There is a B. Okay, so that was a ABC and that is your X. And you're going to get a new ABC down. We are of course only interested in wave A down, which will take us to test the bottom of C here at 34 once again. So you may consider to sell 39.50 and 39.70. Your stop is right about 41.50, 200 points, so $2. Okay, that's it here, 41, about 41.50. Okay, and your target is 34. If you have already shorted at 38.75 and 38.11 shown here, or 38.50 and 37.75 and averaging 38.25, you could consider to hold all the way down to 34, probably raise your stop, make it a $2 stop. Alright, if this is averaging 38.25, it becomes 40.25. Alright, so I think that brings us to the end of our analysis. Yeah. You could take questions now. So things with the elections are still good as they are. We want to monitor results are going to be out soon. What's important to note is the estimated vote count. This is here 99%. And the contestants are very close together, 49.6 and 49.2. So there's only 1% being counted and it can swing any way, alright? For North Carolina it's 94 and for Pennsylvania it's still 87, so a long way to go, and for that it's still 75. Western coast of the United States, so it's delayed time. Don't know, they could go broadly sleeping then, I'm not sure on to that. Okay, so if you have any further questions, please, any other questions, please move them on to the moderator and we will take care of these. If you wish any issue repeated, so make a note to the moderator and we will take the time to review and revise issues that you wish data. Keep in mind that the markets are now expecting a strong rally in April and stocks. Okay, so gold, all the majors will be going up against the dollar. This is what we want to be invested in or trade, and there will be dollar weakness on anticipation that there's coming strong stimulus once election issues get resolved, and they appear to be coming to an end now as Biden is only 6. So I think that brings us to the end of our analysis. It's been great having you all with us, and we will look forward to having you with us tomorrow. Okay, so take care and all the best for a very, very profitable day. Take care, bye.
Udah beranak? Beranak.